Are you ready to mark your calendars because we're revving up to reveal the day Tesla is predicted to surge to an electrifying market peak? But it's not just about the destination. The journey electrifies the soul. Join us as we shift gears through the realms of possibility and innovation, where every turn brings us closer to an unprecedented event in the electric vehicle. From the bustling heart of Tesla gigafactories to the quiet power of the Supercharger network, a force is building a current that could power through the barriers of expectation. Experts are saying that Tesla will reach $395 on this date. Stay with us, and you'll discover when and how you won't want to miss a moment of this ride. But before anything else, show your support by liking this video and subscribing to Tesla Stock News. Now, let us get started. The automotive industry is standing at the crossroads of change. Witnesses Tesla's strategic moves, one of which is a game-changing price reduction. The noteworthy development has unfolded. The Model 3, a flagship of Tesla, is now retailing for less than the average car in America. The Model 3, renowned for its blend of performance, efficiency and technology, is now more accessible to a broader segment of car buyers, challenging the notion that electric cars are a luxury item. For context, according to Kelley Blue Book, the average price of a new car in America has been rising, largely due to technological advancements and increased consumer demand for SUVs and trucks. The average exceeded $40,000, a threshold that reflects the changing dynamics and preferences. In the auto market, Tesla, meanwhile, has been working aggressively to reduce production costs through economies of scale, improvements in battery technology, and a streamlined manufacturing process. Tesla has managed to lower the price point of the Model 3 significantly. This effort aligns with Tesla's mission to accelerate the world's transition to sustainable energy by making EVs more financially attainable for mainstream buyers. There have been options or versions of the Model 3 that were indeed retailing at a starting price that could challenge the $40,000 mark, making it competitive with the average new car price. However, it's important to note that these prices are subject to change, and potential buyers should seek the most current information to make an informed decision. The implications of the Model 3's pricing are vast. It means that EVs are no longer an alternative. They are a primary choice but it's the upfront sticker price that often sways buyer decisions. We've seen the expansion of EVs outpace that of traditional gas-powered vehicles, a trend that analysts agree is set to continue. Tesla, a name that has come to be associated with pioneering electric mobility, stands at the forefront of this revolution. We're looking beyond the immediate, delving into what this could mean for Tesla's valuation. Come November, transitioning to another giant of the industry, Ford has had its share of ups and downs. The tentative UA deal brought a breath of relief, but missed earnings have cast a shadow over recent gains. Despite an earnings miss, revenues have shown an uptick, a sign of resilience in challenging times. As we dissect the financial intricacies, one cannot help but observe the contrasting fortunes of these automotive powerhouses. Tesla has remained in the headlines with not just its vehicles, but its expansive vision encompassing massive gigafactories, advanced solar solutions, and the buzzworthy Cybertruck more than a car manufacturer. Tesla is a harbinger of change, continuously pushing the envelope. Now let's talk numbers. We've kept you waiting, but it's time to shed light on the forecast that's been on everyone's mind, with an expanding portfolio of models catering to various market segments. Tesla's sales volumes are expected to grow, thereby potentially boosting its share price. The anticipation of increased EV adoption rates worldwide could drive investor confidence, pushing the stock towards the projected $395 valuation by November. Traditional automakers are scrambling to transition to electric drivetrains with varying degrees of success. As they invest heavily in this transformation, they face challenges like supply chain management, battery sourcing, and establishing a reliable charging infrastructure. Tesla's established lead in these areas could see its valuation soar as legacy brands struggle to keep up, underscoring the competitive advantage Tesla holds and possibly reflecting positively on its share price. Federal EV tax credits in the United States are designed to make electric vehicles more affordable, encouraging consumers to make the switch from internal combustion engines. Tesla having already reached the previous cap on these credits, stands to gain if new legislation extends or enhances these benefits, potentially increasing its sales and, by extension, its stock value. Positive regulatory changes could serve as a tailwind for Tesla's share price trajectory towards the anticipated $395 mark. The Cybertruck represents Tesla's foray into the lucrative pickup truck market, a segment traditionally dominated by ICE vehicles with its futuristic design and promised performance features. The Cybertruck has already garnered significant consumer interest, reflected in its reservation numbers. The actual launch and subsequent production ramp-up could provide substantial growth momentum for Tesla's revenue and its stock price. Investors are watching this space keenly, as the successful launch could be a game-changer for Tesla's market capitalization industry. Experts from the investment community often have a forward-looking perspective on companies like Tesla. These professionals remain bullish on Tesla's capacity for innovation and market expansion. The company's ability to not just adapt but lead in the evolving automotive landscape supports positive investor sentiment, potentially driving up the stock price. Analysts anticipate that the release of the Cybertruck, along with a refreshed Model I and other strategic moves, could reinvigorate the brand and attract substantial investor interest in the context of these four domains. Tesla's anticipated valuation of $13.95 per share by November 28th reflects a broader consensus among experts that the company is at the forefront of a major industrial shift. It's not just about the vehicles they produce, it's about the broader ecosystem. Tesla is creating everything from energy generation and storage to AI-driven autonomous technology. Tesla's multi-pronged approach to growth and innovation, coupled with favorable market dynamics, sets the stage for a potentially rewarding end of year for shareholders. Tesla is thus not just evolving, it is setting the pace for the automotive revolution. The International Energy Agency has cast a spotlight on the electric vehicle. Markets are noting an unprecedented surge in sales by the end of this year. Nearly 1% of all cars sold are expected to be electric, disrupting the traditional auto industry and challenging the oil sector's stronghold. Tesla, at the forefront of this revolution, is not just participating in the market. It is setting the pace for growth and capturing the imagination of consumers worldwide. While Tesla has already carved out a significant market advantage with its innovative technology, brand value, and customer loyalty and affordability remain pivotal factors, the company's efforts to reduce vehicle prices could further strengthen its market position in the broader scheme. Federal EV tax credits also play a role. Changes to these incentives could boost Tesla's sales and market share, effectively accelerating the company's growth trajectory. As we look towards November 28th, it is not just about the cars themselves. It is about the larger picture. Tesla's stock, currently projected to ascend to $13.95 per share, tells a story of confidence and promises to sustain this momentum. The answer lies in a combination of strategic pricing, brand strength, and unyielding innovation. The Tesla Supercharger network is not merely a functional infrastructure to support the charging needs of electric vehicles. It is a hallmark of Tesla's vision for an integrated, customer-centric EV experience. As Tesla's stock edges towards the anticipated $395 per share valuation by November 28th, the role of the Supercharger network cannot be overstated in contributing to the company's overall appeal and customer satisfaction, which in turn supports its market valuation. Tesla's strategy for deploying Superchargers has been one of meticulous planning, ensuring that they are not only accessible in urban centers, but also strategically spread out to facilitate long-distance travel. The growing ubiquity of superchargers across the nation enables Tesla to tout one of the most significant selling points of its vehicles: the freedom to travel without the range anxiety that plagues many potential EV consumers. Superchargers are renowned for their rapid charging capabilities, allowing drivers to replenish a substantial portion of their vehicle's range in about the time it takes to have a coffee and stretch one's legs. This quick turnaround time is pivotal in the lives of busy consumers who are accustomed to the quick refuel times of gasoline-powered vehicles. Tesla has created a sense of community and exclusivity through the Supercharger network. Line access to these charging stations, especially for early Tesla models that enjoy free charging, has been a significant draw. This network has become a place where Tesla drivers can connect, sharing experiences and advice, further cementing the brand's community-centric approach. The Supercharger network is integrated with Tesla's technology ecosystem. Drivers use the company's app to locate chargers, check availability, and even pay for charging if applicable. This seamless integration elevates the user experience, making innovation and sustainability and a tangible representation of the company's advantage over others. The ongoing expansion and enhancement of this network are crucial in supporting Tesla's valuation and market position. And let us not forget that the Cybertruck 2 is a manifesto of innovation, from its unconventional aesthetics to the promised self-driving capabilities despite production hurdles. Tesla's resolve has kept its vision for the Cybertruck firmly on course. The gigafactories in Texas and Berlin are the heartbeats of Tesla. Global strategy and the key to scaling up production to meet the soaring demand. Overlook the upcoming expansion of Tesla's factory in Gruny or the enigmatic Project Juniper, rumored to be an evolution of the model. These ventures are more than plans. They are the very steps Tesla is taking towards an extraordinary 2024, so we just saw how Tesla will be in the month of November, from the competitively priced Model 3, shaking up the auto industry to the projected $395 per share valuation. Tesla's journey is one of relentless innovation and strategic growth. The Cybertruck's upcoming launch, poised to refresh the brand's image, and the Supercharger network's expansive reach and convenience are crucial chapters in this story. These elements, together with Tesla's ability to navigate federal EV tax credits and outpace legacy automakers, underscore why Tesla is not just driving change in the automotive world. It's accelerating it now. How do you believe the Cybertruck will impact Tesla's market share? Which of Tesla's innovations excites you the most about the future of EVs? Don't forget to like, share, and subscribe to Tesla Stock News for regular updates on all things Tesla. Thank you for joining us today, and see you in our next videos.